Welcome back. Big breaking news coming in. The market erupts in joy, ladies and gentlemen, in the wake of the G20 success. Nifty crosses the 20,000 mark. Nifty hits its fresh record high. It hit that record high of 19,992.85 in intraday trade on Monday. So that is the pitch that's come in. Nifty's last all-time high was 19,991.85, which it hit in July 20th. This year, experts expected the market benchmark to hit a new high as sentiment was upbeat after the G20 summit. So that's the piece of breaking news that's coming in. So as you can see, the impact of the G20 summit, and many experts are saying that this new benchmark that the Nifty has hit, it has come in due to improving global cues, a strong rally in many heavyweight stocks, and of course improved sentiment after the success of the G20 summit. So that's the piece of breaking news that's coming in. The markets, of course, seeing the positive sentiment in the wake of the G20 summit. Now the Nifty has crossed the 20,000 mark. Nifty hit this fresh record high of 19,992.65 in intraday trade. This happened right today. The entire mark was hit around 3:15 p.m. ladies and gentlemen. Nifty's last all-time high was 19,991.85, which it hit on July 20th this year. Experts expected the market benchmark to hit this new high as sentiment was upbeat after the G20 summit. And what we're also learning, as many experts are also pointing out, that improving global cues, a strong rally in many heavyweight stocks, and of course the G20 summit success has led to this new benchmark in the markets in Dalal Street. So that's the piece of breaking news that's coming in. Investor confidence all-time high when it comes to the India economic engine, and the G20 summit also pushing up market sentiments. And we see over here the Nifty crossing the 20,000 mark. Nifty at an all-time high, ladies and gentlemen. When it comes to this new benchmark, 19,992.65 in intra-day trade was hit at around 3:15 p.m. today. The all-time high last time was 19,991.85 around 20th July. I'm joined by my colleague Lata Venkatesh of CNBC TV 18. Lata, please decode this for us.
Well, this was coming a long time, and now it's like a coming together of many good factors. We had a fairly decent quarterly results, and banks ended with some of their best results ever. Corporate India has deleveraged, so it looks like they are in a good position to do even better. But the most important point is Indian savers have gotten financialized a goodish bit in the past 3 years across COVID and thereafter. Look at the mutual fund flows. We got the mutual fund flows for August. The numbers are absolutely mind-boggling. 20,000 crores has come into equity funds. 15,800, that is a record high, has come in only through SIP. Now, what is an SIP? A systematic investment plan, which means these are guys who every month set aside money into savings. There is a certain faith that this money will keep coming because it's become a habit. And then a large part of the money has gone to mid caps and small caps, about 7,000 crores. So clearly, financialization of Indian savings has made us less dependent on foreign investors. So although the FII numbers have been, negative numbers for the past several days, the Indian investment has, reached substantial proportions. So this is what you call liquidity in the stock market. There is a liquidity-driven reason for the rally, and there are fundamental reasons in the sense the economy, or at least the corporate sector, is in a good place. So that explains the continued positivity that we are seeing. And then, of course, there is policy to help, the bonhomie engendered by the G20, expectations of infrastructure orders because of this European corridor, European economic corridor. All that is helping.
Right. Thank you, Lata, for decoding that for us. So a huge boost to the markets in the wake of the G20 summit. Now, remember, ladies and gentlemen, G20 summit has been a diplomatic win for India. Now, in a first of its kind, an enormous trade and infrastructure endeavor connecting India, the Middle East and Europe was presented on day one of the summit. Now, as part of the proposal ports, electricity and data networks and energy networks are slated for development through this entire project between India, the Middle East and the European Union. It is anticipated that it will serve as a counterbalance to China's Belt and Road Initiative. This comes as the BRI has fueled worries regarding Beijing's expanding footprint across 3 continents. Apart from countering the BRI, the economic corridor is anticipated to spur economic growth by utilizing improved connectivity and economic integration between Asia, the Gulf and Europe. Meanwhile, in a major development, Italy is likely to walk out of China's BRI. Remember, Italy is the only G7 nation to sign up to the BRI. So that is the big news that's come in from the G20